Riverlands,
Drink water.
Riverlands was nice enough to sponsor this event for us tonight and provided, everything we got here, so we really appreciate that. John Benora, sitting right up here. He's been my right-hand man, my insurance guy, so he's an insurance agent with Riverlands. He's helped a lot of my clients, when they purchase a home.
I'm not a good speaker in public.
I called John up, told him, hey, we're going to do this event in October. I need you there. He said, Mr. John, I'm going to help you out, but I'm not your man to talk. I'm not your public speaker, so
That's it.
Mr. Louque's pitch hitting for you tonight. But no, we appreciate you putting this on. And Mr. Matthew Willard, we appreciate you coming out and talking with us a little bit about what you're seeing on the government side. No shock to anybody here. Insurance has gone up, right? Whether you're a homeowner or a landlord or even a tenant. Some of you may be a tenant and you have your rent go up. Your landlord may say, well, my insurance went up. My cost went up to operate this building, and the rent's going to go up because of that. A lot of reasons for that. We're going to tackle some of those tonight. Kind of on a real simplistic level. Nationwide, insurance went up because things got more expensive, right? The building materials, we got a contractor in here tonight. He can vouch for the fact that, the 2x4 that you bought in 2018 is not the same cost of what you buy today 4 years later. So the expenses of the things we're insuring and the labor, to build the homes that we're insuring, all those have gone up, right? And then we'll also talk about some of the other factors that are causing that to happen. To my left here, Mr. Nolan Louque with Riverlands Insurance. If you just want to tell us a little bit about Riverlands, what y'all do.
I'm actually Nolan Louque. I'm the CEO and owner of Riverlands Insurance Services. We've been in business 50 years. Look pretty good for 75. So don't laugh. 74.
You're joking. Okay.
Whatever I'm drinking, that's what I'm drinking. No, but we license in all 50 states. So we are an independent agency. And I'm just proud to be here. And if I could give anybody a helpful hand or really let you know what's happening that we're going to be facing, ask any questions you have, because I'm here for information purpose. I'm not here to sell, but if I can help you out, I'm the first person I'm going to handle. So I appreciate the invite.
Absolutely. And we got Representative Willard here. You represent Mid-City, Gentilly, part of Bayou St. John, and you serve on the real estate committee, insurance committee.
Insurance, Ways and Means, Municipal, Parochial, and Cultural Affairs, co-founder and chair of the STEM Innovation Caucus, and some other subcommittees as well. Thank you for having me, John. It's an honor to be here with y'all tonight. I was elected in 2019, so I am toward the end of my first term. I'm born and raised in New Orleans, grew up in Gentilly, went to Jesuit for high school, graduated from Willard. And one of the biggest reasons I ran for the legislature is because I want to actively create a diversified economy for our state. I think that's very important for the city of New Orleans. And I'm working to do that through my STEM Innovation Caucus. One of the big issues, obviously for everybody in this room, but really for everybody south of I-10, is the insurance market. Homeowners premiums are going up. I think we saw across the state about a 7% increase at the end of last year. We'll definitely have another pretty big increase at the end of this year. Then you have the new flood insurance rates coming in, so it's really, I won't sugarcoat it. I give it to you how it is, but I'm looking forward to your questions as well, and I'm happy to be here and part of this discussion.
Absolutely. Yeah, when I talked to Mr. Louque earlier this week, kind of preparing for this talk, going over some of the topics, he said, well, how ugly do you want it to be? And I said, well, we just want to shoot the truth, right? We want to be real with what we're seeing in the market, what we're seeing on the real estate side of things, and we want to be a resource. We want to be a source of information, and we're going to do more of these, right? They're not all going to be around insurance, but we had a discussion some of y'all came to in August, kind of around just the real estate market as a whole, and kind of the climate that we're in. We'll start off talking about that. So I didn't introduce myself. I'm John Hendrix. I'm the team leader for Hendrix Group. We're a residential real estate group with Keller here in New Orleans. Primarily work in Jefferson Parish and New Orleans. We've got a sister part of our business that manages property, small time, multifamily properties is kind of our bread and butter. Most of our owners own 2 to 10 units. And then a sister company to that is the short-term rental property management. So that's what we do. We do all things property management and sales. We're traditional brokerage. Help a few people in here with transactions before. Wallace here, he kind of heads our property management that we do. Becca does basically everything for us in our office, everything marketing related. She played a big role, her and Blair both played a big role putting this together. It's a fairly small event, seems pretty simple. There's a lot that goes into this, and really appreciate all the work she does. Appreciate y'all. Brittany's on our team, she's an agent. And then Blair in the back is an agent on our team as well that helps with our transaction coordination. So we'll start off just a little bit briefly, talking a little bit about the market. That's where we left off with the last talk. Let's see if we can just go to the next page. There we go. All right, so what you're looking at here, this is the median sell price in our MLS. So this is Jefferson Parish, Orleans Parish, St. Bernard Parish, St. Tammany. So this is a pretty big area we're looking at, right? This is not a specific to your neighborhood or specific to where you're looking to buy a home. But it tells us a lot of information about trends, right? So in September, the median sell price was $264. You'll hear a lot of headlines, the market's terrible, right? The market's really, really bad. You'll hear headlines like that. And it is not as good of a market if you're looking to sell a property as it was, let's say, in March. But this puts things in perspective, right? So the median sell price right now is higher than it's ever been, other than, as you can see, a few different times in history, right? So the median sell price is still a healthy number. There was a big drop in June of this year. From June to July, it went from around $290,000 median sell price to like $270. So that's a pretty significant drop in 1 month. But as you can see, it's sort of plateauing out right now. The number now is very similar to what it was in January of 2022, right? So go back 10 months, and nobody said we were in a terrible market, right? We're at about the same median sell price now as we were, just to kind of add some perspective to, I don't think it clicker is working for me. And we did test this beforehand. It worked perfect. Median days on market, right around 3 weeks, 20 days. It's much more of a balanced market than what we experienced really much of the last 18 months. What I've told people is, for the first time in the last year, if you're looking to buy a home, for the most part, you have an opportunity to go home and sleep on it, and talk about it, and think about it. You don't have to make a decision as you're looking at the home, which is not really a great way to buy an expensive asset like a piece of real estate. This is phenomenal to me. So, you'll hear headlines that the market's bad. Well, 98.5% of homes in our market sell for 98.5% of the last list price. Now, that doesn't take into account that there are price drops, but homes are selling for pretty darn close to what people are asking for them. Sometimes there's a price drop, so this is a little bit deceiving, but we're not at 100%. So if you're looking to buy a home, it's gotten a little bit better than what we have been experiencing much of the last 2 years. Is the video? Yeah. Okay, so we have a little short video. So this is a heavy topic. Some might say a boring topic, insurance. I'm a big Office fan, just the television show The Office. Some of y'all might be familiar with that program. The scene you're about to see, Michael Scott and Dwight had just driven their car into a lake. Okay, so they drove a rental car into a lake. They were following the GPS blindly. The GPS told them to turn right where there was no road, and they went straight into the lake. So It's a sitcom.
I've seen it.
Yeah.
When it's showtime, it's not wanting to cooperate. We did a trial.
We did like 4 trial runs and it all terrible.
Clips worth the lick, though, in my opinion.
You sure you're okay?
Fine.
Good. That is what's most important.
Did you get the rental insurance? Because that is pretty important too at a time like this.
I don't think Michael bought the rental insurance. I look on his face, and y'all probably been in a situation like that before. We've had something break, and you wonder, do I have insurance for that? It's not a good feeling when you don't have it. Just a little story. I think it was in 2018, 2019. Y'all remember Hurricane Barry? Basically, it was a non-event, but it was a big story at the time because it was really early in the hurricane season, really like unprecedentedly early in the hurricane season. We had this hurricane coming towards New Orleans, and the river was high. And the river's never high during hurricane season, right? The river's high in the spring, and then by the hurricane season, the river's low. So we had this storm coming towards New Orleans, and sometimes the river rises when a hurricane comes, and the river was at the top of its banks. And we had this hurricane come, ended up being, it kind of fizzled. But I had elected the year before, I did the brilliant thing of not renewing my flood insurance. I said, I'm in an X zone, been paying it for all these years, I don't think I need it. Boy, I was sweating bullets. I felt like Michael did. So we'll get into our discussion here about insurance and some ways that we can have a role in lowering our premiums and things we're seeing. So insurance is really high right now. It's high nationwide, right? We've seen increases probably in every state. In California, they've been dealing with fires, and here we're dealing with flooding and wind damage due to hurricanes. Matthew, what are you seeing? Why do you think that is? Like, what are you seeing? Why are the increases? Why are these insurance companies charging more today than they were 2 years ago?
Well, the big reason is the reinsurance market right now. So that is essentially the insurance that insurance companies buy to cover potential payout of claims for a given year. And like you were saying, John, with all the catastrophes around our country, but really around the world, flooding, forest fires, hurricanes, other natural disasters, the reinsurance market took a hit, and their job is to make huge profits, and so it's more expensive. It actually led to a couple companies leaving Louisiana because they were deemed too risky, I guess, to actually get reinsurance. And I guess at a certain point, Nolan probably could weigh in on this a little bit better, but if you're buying reinsurance at a dollar for dollar ratio, it doesn't make sense. So we had companies in Louisiana fail because they couldn't get reinsured. But with all of those calamities coming together, the reinsurance rate is super high. And obviously that's going to get charged on to the ratepayers, which is us, all the homeowners in Louisiana, particularly for us below I-10. Another toxic reason for the people below I-10 is because we have fewer companies writing policies in that area. And obviously when you have less competition, rates are going to go up. And then on top of that, you now have about 120,000 policies on Louisiana citizens. And just to give you some perspective, I believe before the 2020 storms in southwest Louisiana, we only had about 35,000 policies on citizens. And 35,000 is way more of a manageable number than nearly another 100,000 on top of that, because the Department of Insurance job is to place policies on citizens into private insurance. But when citizens' policies keep growing, it's harder to do. And you have fewer companies writing. So all of those factors coming together, the storms that we got hit with in 2020 on top of the storms we got hit with in 2021, think insurance companies, we're looking at about $24 billion in claims from those 2 years in storms just in Louisiana. It's increased the rates for Louisiana citizens.
Well, maybe you can back us up just a tad. Tell me what reinsurance is, right? And then tell me why you think we're seeing, your take as an insurance broker.
Well, the main thing I'll try to make it a little simple is that when you have your own homeowner's policy, you have a deductible, right? And that's the risk that you're willing to take. So if I have a $5,000 deductible or 2%, that's the risk that I can afford, and that's the risk I take. It's the same thing with the insurance company. When you get your insurance company, it says ABC Insurance. Their deductible might be a $25 million deductible, it might be a $10 million deductible, but behind them is all these, like he said, that all of these companies do buy reinsurance. So they just like us. We take a $5,000 deductible. The insurance companies might take a $25 million, $50 million, anything they can afford. So what happens is once they meet their deductible, it's the response, like me, once I meet my deductible, it's the responsibility of the company to finish paying my claim. Same thing with them. Once they reach their $25 million, $50 million deductible, it's the responsibility of the reinsurance to come in and finish paying the claims. The problem of you seeing that everything that you see, like he was saying, from the storms in Florida, from the fires, they all got reinsurance. So when you watching TV and you seeing all these disasters hitting, and you saying, oh, thank God it didn't hit Louisiana, thank God, it hit you. The one that had Florida is gonna cripple us here in Louisiana. You saying, we good? You're not good. Because what's happening is the reinsurance people that reinsurance all the companies in Florida is reinsurance us. And they're gonna take a huge loss for this storm, and believe me, the reinsurance is gonna influence us, right?
So the people reinsuring policies in Florida are reinsuring people nationwide.
It's the same ones, the Lloyds, the Londons, the Munich Re's, the big companies of the world insure everybody, right? So everything that you see is going to influence us in Louisiana. So just want to give you a mindset. You think you got ABC insurance? You do, but that's only for the first layer. All the bottom layer is all reinsurance, and it influences everything. I know that everybody's seeing, and this is my opinion, and I don't know what you're thinking, is that Louisiana citizens, where a lot of these people are going, is taking a 63% rate increase, right? And the first thing you're saying, my gosh, our industry is crushing, all right? I might have a little bit different opinion, right? When I saw that 63% rate increase, right, I'm looking at, that's a good move, right? I'm gonna tell you why, right? Because right now, Louisiana citizens, if you would call me today, Louisiana citizen today is probably one of the cheapest markets out there, okay? So what happens is when they take their 63% rate increase, which will have pain in the beginning, right? But what happens is it's going to allow more companies to come in, and when more companies come in, it generates competition. When it generates competition, everybody's going to, it's just like Katrina. People finally came in, and when competition came in, this one came this, got to beat it, got to this, and it works the way down. If the Louisiana citizen wouldn't take a rate increase, and they're the lowest, in there is no competition, and you never get relief again, right? So by them, bus going up 63%, more companies is going to come in the suit, and when more companies come to play, when people come to play, they gotta play, they gotta sell. And what that's going to do is the first guy's going to come here, he's going to be taking part of the business. I gotta compete, so what I'm going to do, I'm going to lower it. I gotta compete, and that guy's going to come, he's going to do the walking down. So how bad you think going up 63%, the effects of it is, it's going to generate more people from the outside to come in to get a piece of the pie. And once they start playing ball, they gotta do this, right? So I just want to let you know, it sounds bad, but if Louisiana citizen keeps this rate the same, which they can't, because they have in their contract, it says they gotta be 10% higher than the highest market out there. Because the state cannot compete against the private market. So they got a rule and regulations in the state that says they have to be 10% higher than the highest one. Because if they was the lowest, nobody would come in and play. Nobody would come and play in the sandbox. So they got rules and regulations, they gotta be 10% higher than the highest private market. But believe me, going up 63% is gonna be crushing to some of these people. I mean, crushing. But for us to be able to bring up the real estate market, to sell some of our properties, it's gotta take that step. So everybody will come play in our sandbox, and when some people start playing in our sandbox, it's gonna generate competition that lowers the rate down. Because look, a premium after, just say a premium before Katrina was just say $1,200. It went from $1,200 to like $5,000 after Katrina. Competition came back, it worked its way all the way back to that $1,200, $1,500. It's gonna be the same thing. Right now, we're sitting at $2,000 a year ago. Now it's $8,000. You got it. What's gonna change? What makes the market come back down? Competition. If you don't put competition in our state, it will never come down. By them jacking up the rate, how bad you think it is, gonna allow players to come in. The fair play, I'll keep on talking, so I mean.
You're good.
Yeah. So Louisiana citizens came back and offered 63%. Guess what? A week later, we got two companies that's coming in January 1 that's not in the state today. Within a couple days, because now they know that $5,000 rate is gonna be $7,500 rate, so they can come in at $6,500. The next guy's gonna go boom, and it's gonna work its way down. So, it's gonna, as I always said, it gotta get worse before it gets better. It's gonna get worse. But within 2 days, two companies coming in of the state of Louisiana that's never been here. They got agents, all right, and I'm part of the group. We got agents pooling out money in to be able to offer a new product in January 1. So, I just want to let you know that the citizen 63% is going to allow people to play, charge more money, yeah. But what it's going to do, once they commit to a state and they in the state, then they got to get a piece of it. And the only way they're going to do it, if somebody's at 65, I got to be at 6. And the guy's at 6, man, I got to be at 57. And it's going to work its way down. And look, you more on it than I am. And then, but they doing a great job. Y'all don't know about it. They have incentives. Maybe you can talk a little bit about the incentives that they trying to bring in that incentivize people from the outside to come in. And by doing that, they put some programs in place that doesn't. So I know I'm skipping around, but it kind of.
I think you did a great job capturing everything. I think we're done, George.
So, about Louisiana Citizens, right? So Louisiana Citizens, that's a state-run insurance program, is that right?
Yes.
Part of what they were doing is what they call depopulating the risk, is that correct?
They're trying to depopulate citizens.
Okay, what does that
The
mean?
exact opposite is going on right now.
Okay.
Because you have the more companies that leave the state, the more that go onto citizens, especially below I-10, because you have fewer companies right in their area. So it's harder for you to get a policy if you can get one at all. So you go on to citizens. We don't want policies on citizens. It's the insurance carrier of last resort. Last resort. Florida has one too. The goal of citizens is to, I guess, serve as in a transitional phase until you can get back on to private insurance. And like Nolan said, they are constitutionally bound to be 10% higher than the highest premiums in that area. So they're supposed to be above market rate. So if you get a letter that you're going on to citizens, your rates are going to go up. And the only way we can depopulate citizens by getting people off of citizens is by getting more activity in the state. How do you do that? I mean, we need more companies coming into Louisiana, particularly below I-10, to write policies. Not only that, but we need them to take these policies away from citizens. So there's two things, I guess there's two overall things that we can do. One, there was a program that was stood up after Hurricanes Katrina and Rita, which was, I think, $100 million deposit from the state legislature that was used to incentivize and kind of de-risk new companies that came in and wrote policies in those impacted areas. It was a big success, and we had a lot more activity. We had a lot more companies writing policies below I-10. So we renewed that policy this legislative session. The problem is that we didn't appropriate any funding to it. And I'll tell you why. Overall, if you talk to any members of the legislature, it was a pretty bad time to look like you were doing a handout to insurance industry. People were, grieving. People were trying to get their claims paid out. People's claims were being denied. It was really chaotic. And if you drive around New Orleans, you still see all these blue tarps that could be for people who were not insured or underinsured, or the deductible was too high. And so for us and there really wasn't a big effort to try to get that funded, but the Commissioner Nolan, is really trying to push for it now so that we can get funding in that program. And that is one way. The guys in London, Louque, said that is one way that we could lower rates in Louisiana and get more companies here. So the way it would work is if you agree to come into Louisiana and take off some of these policies from citizens, and right below I-10 in the impacted areas, you would be eligible for some type of cash payout, which could go toward your liability for the policies you take on. And that's essentially how it functioned after Hurricane Katrina and Rita. So that is one thing that's being worked on right now. The other thing is just...
And the objectives for green competition, is that?
Yeah, I mean, the only way you get rates down and the only way you get policies off of citizens is by competition. It's possible that incentive program will encourage companies that are doing business in Louisiana but not below I-10 to come and write policies below I-10 as well, but that will create more competition in the area. So that's another aspect to it. The other is a program called the Fortified Roof Program. And that program would be funded through self-generated revenues through the Department of Insurance. I think it's to the tune of $10 million, I believe, but it's not funded yet. And so that program would essentially provide gap funding to someone who has to do a roof repair. And so your basic roof repair to the cost that it would cost to make it fortified, weatherized, durable. And so that program, hopefully we can launch next year as well, because that's another way, to possibly lower rates, making sure that your home is weatherized and durable, that your roof is fortified. That could potentially lower premiums, and I'm telling you all the information I get when I'm in Baton Rouge and insurance committee meetings. We have another one next week to kind of get an update from some of the different stakeholders and from the insurance commissioner. It's a dynamic process. Everybody's looking at it, from the governor to the insurance commissioner to independent legislators to the independent agents. Everybody's working on it because we're kind of in a crisis phase right now.
So the fortified home, fortified roof, is a better quality roof, right? Do we have an idea of estimation, what does that look like practically as far as what does it save somebody if they go in and get a new roof and it's now a fortified roof, certified? What does that look like? Do you have an idea?
I don't know what the cost savings on premiums would be, if that's what you're asking. I'm not really sure. As far as the launch of it, like I said, I'm hoping we can launch it next year, because I think it needs the funding appropriated. And then as far as eligibility goes, it'll be on a first come first served basis. I don't believe there'll be any type of income or value cap, so it'll be really open to everyone. And once it gets launched, there'll be a lot of information out there about it.
The general idea is that the state would help fund some of the gap cost of getting a fortified? Is that the idea?
Yes. The general idea is throughout Louisiana, we have a lot of older homes, and our homes take a lot of beatings during storms and heavy rain events. And a lot of us need roof replacements, roof repairs, and when we're doing that, we might as well just go ahead and make it a fortified roof because we save on the back end, although it costs more upfront on the front end. And so this is a program to help, I guess, transition some of those property owners to that fortified roof status, which, if we see more of that throughout the state below I-10, we should see a reduction in premiums.
Mr. Louque, a couple questions for you, kind of two-part. One, do you have any idea what type of impact have you seen with fortified? You work with the insurance companies that recognize that program. It's been around for a long time. It's a big deal in the state of Florida. It's a pretty big deal on the coast of Alabama even. It seems like it's slower for whatever reason to kind of take off here. It's been around for some time and it's big in other parts of the country. Do you know anything about the cost savings for that? And the second part of that is kind of a big picture approach. Like what should you be looking at when you're looking at buying a home? It's going to factor into the insurance rate. Is there a certain style of home that's going to make a difference? Is the size of the home, the age of the home, some things that you can do practically speaking to have some control over the premium you pay.
So the first thing about it is that in Louisiana, it's not in system right now. But in Florida, it's a main thing. Well, I'm licensed in all 50 states. We write some business in Florida. Part of a policy, when you look at it, and if you would go back and your rate is $4,000 for your home, they got a fire side to your policy and they got a wind side to your policy, right? The fire side is probably about 20%, 25%. So out of a $4,000 premium, $3,000 of it is rated on wind, and a small portion is the theft, the fire, the vandalism, right? And when in the Florida areas and stuff where that we've been seeing anywhere from 35 to 40% decrease when you fortify the roof, right? Because it's all wind, right? So you can take 75% of your premium, then take about 40% off of that side, and that's the numbers. What the main thing of it today is, what's the front of it? So all of they're doing a great job of trying to bring that to the state of Louisiana, but I mean, you might be buying a house today, you might be buying it next month, and these things are not going to trigger in. So what can you do? Things that influence rate, all right? One of the things, HIP convert compared to gable, all right? When you buy a house and you want, to know what's the difference between HIP and gable, we talking 15%. A HIP roof, all right, and look, I'm gonna do layman's terms because if you look at your house and it's got gutters all the way across and it's like a box, all right, so you look at it, it don't have peaks, all right, when you look at it straight across the sides and the back, it don't have all these peaks and valleys. So when you're looking at a HIP roof, it's really just the box shape. Wind can't get under it. Right? When you got a HIP and it's got all of these hips and valleys, the thing that's having roof damage and paying more claims. So if you get a HIP, you get a 15-20% deviation. Gable, but if you got the hips, they surcharge you. Another thing, the main thing right now, but I'm gonna leave you with this. Start you with this. Your relationship with your agent is more important today than it ever been. All right? Because in the old days, what you did, you got a bill, you paid for it. You got a bill, you paid for it. And you really did, went up a little bit, you really never dealt with your agent. But there's a lot of things your agents can do. And look, I'm an agent, right? I don't know. But they're not coming after me. Look, we're going to talk layman's terms. They're not coming after you to try to save you money. Right? They're not going to knock down your door to tell you how you reduce your premium by $1,000. Why? Because it affects the pocketbook. Right? So I'm telling you is build a relationship with your agent, right? And go build your own policy. And what you're going to mean by that? If you ever look at your house, let's say about $200,000 house, automatically it comes with 100,000 contents, other structures, boom, 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 there's your premium. But if you go make a relationship with your agent and sit down with it and says, you know, and we do this all the time, that I don't have 100,000 contacts. Can I lower it to 50? I don't have a building in my backyard. Okay? Can I lower it? And I'm gonna tell you now, a lot of agents ain't gonna wanna do it. Right? You got a question?
Yes. So it's around the replacement cost, which is the issue I have all the time. So
Okay.
let's say you have a 31 square foot home, it's a replacement cost.
That's right.
Yeah.
So the agent will say, what is your replacement cost, right? So if you got 31 that's already built in, once they put it into the calculator, so what is that? So why? So if I tell you, I don't think it's gonna cost me $600,000 to replace my home, why does the actual system mandates that's the,
Right. So the first thing, when I was talking about go build your own policy, I never talked about coverage A. Coverage A is your homeowners, right? We talked about contents, which is yours, right? We talked about other structures that you don't have. But actually what it is, I'm gonna tell you why companies don't allow you to play with it and keep your replacement costs, okay? When you go in there and you make a cost estimator, all right, nationwide, all of this system building, what it's gonna cost you to build. Companies know that 99% of your claims are not going to reach a total loss, right? So what I'm saying is, they're not gonna let you lower it from 400,000 to 200,000 because you know that's where your losses are, right? So what they want to charge, the insurance company is gonna charge you the total value of what it's gonna take to knock it down and build it back, and they come up with that. And they trying to get the highest premium they get to get the replacement cost. Because what happens, they know 50% or 90% of your claims are gonna go fall in probably the first, only the bottom 50%. So they're not gonna allow you to adjust, because if they do burn down, it's gonna take a certain amount to bulldoze it down and rebuild it. But, you know, some of the things, going back what you said, is if you build the only thing that you can't touch or you can't control is your coverage A. That's the amount the insurance company is gonna insure your building. But what you can do is hip compared to gable, alarm systems, lower your contents, lower adjacent structure, and all of these factors, because what happened, you're paying for a lot of coverage that you don't even have. You're paying for other structure, you got a $400,000 building, they make you take 20% of coverage, they insuring your building in the back for $80,000, you don't even have it. But if you go look at your policy, it's all built in. And if you don't go make a relationship with your agent and sit down, you paying for $80,000 adjacent structure that you don't have. You paying for contents of $200,000 that you don't have. And if you don't build a relationship with your agent, sit down, all right, your premium, you're gonna be paying a piper. In today's world, you're gonna have to do everything possible. Because look, the next 2 years are gonna be rough. The next 2 years are gonna be rough. Competition's gonna come in. But to me, what happens is you have a contents loss. You know what they do? They give you a clean piece of paper, they're gonna come over here, we'll give it to you, and they're gonna say, write it. You start writing all your contents, guess what? You don't remember nothing you have. You don't remember. You got $200,000 contents, and it burns down the ground. You ain't getting 200,000. They give you a clean piece of paper that says, start writing, and you gotta prove you got $200,000 worth of stuff. The first thing that happens in the claim is what? Tell you one thing, I know one thing. First thing when I got a claim, my mind's gone. I'm worried about my family, I'm worried about where they're gonna live, I'm worried about rebuilding. I'm not worried about all these items on the thing. Go insure yourself to what you have, not what they make you buy. And I'm telling you, you can save hundreds of dollars and don't hurt you at all. So why insure that garage in the back when you don't have it? Why insure yourself for $250,000 of contents when you don't have it? Because they ain't paying it. Don't think when that thing burns down and you got adjacent structure on your property, don't think they got $80,000 you're gonna get that check. Because if you don't have that property, you ain't getting paid. And I'm telling you, go look on your stuff right now, 90% of y'all are paying for stuff you don't even have. Right? And I'm just saying this, look, I have 43,000 customers, right? I'm the biggest in the South. It is no way possible that I personally can build a relationship with everybody. But I know one thing, if you would call me or you call our office, you're gonna get the service you need. So what I'm just trying to say, it's not your agent's job, because he really don't know if you got what you got in your house. It's not your agent's job to know, you don't have a garage, So don't leave it up to your agent. Build your relationship with your agent and go buy what you need, especially these ones.
Yes, affordability is a really big topic, right? It's a big topic for people you represent. It's a really big topic for people I represent, people Brittany represents, Blair represents. When we're showing homes now, insurance is a big part of the disclosures. It's the number one thing people ask for now. Well, what are they paying in insurance? What are they paying in insurance? So this is from last year to this year. So insurance is part of the issue here as far as the increase, but the interest rates have more than doubled, right?
It's still low.
It is probably even higher, right? It changes. It changes on a daily basis, but
Sorry.
this is maybe a week old.
That was a long time.
So affordability is a really big factor. So the hip gable type of roof's one thing. So you can have a house on a block and the next door neighbor's paying $2,500 a year and your neighbor's paying $7,000 a year. What are some other factors? So one of the things that many of y'all probably know, and I didn't know when I first got into real estate, and it was really kind of an aha moment, is that the age of the home is really important, right? Brick or frame.
Yep.
And the size of the home matters probably more than the price of the home. Is that fair to say?
It's very sick, because look, a lot of people have a mindset is my house appraised for, $300,000 and you're making me insured for $450,000. I understand, I hear it every day. My house is appraised for that, you're making me insured for $450,000. So it's got nothing to do with appraisal cost, but it's the size of the home, it's the square footage, because that same home, just say where I live, it is, just say a 3,000 square foot house where I live might cost $750,000, but you go down 5 miles, that same house on another neighborhood, it might only be $300,000, right? So it's all goes by square footage, and it all goes by replacement, and it don't go by appraisal value.
Yeah, I've learned that the hard way.
Yeah.
I got a property, thought it was going to be cheap insurance. The property was cheap, and it was basically a warehouse, and it was very cheap, and insurance wasn't cheap because it was big. It was a big place, right?
So you were just talking about the house value, and make sure they don't insure something for $600,000 or for $400,000. So, but you're saying that it goes by the square footage of the size of the house. So it doesn't matter what they put on there on the policy.
No. Coverage A. That's why I kept on saying, when the dwelling come out, you really don't have no control over that. If you want replacement costs, they're gonna plug it in the estimator, but everything underneath it, right, which is your contents, which is your other structures, which is your loss of use, you got control over that, just like the lady said in the back. I mean, they set that coverage A, so that's the value of your house. That you can't touch if you want to replace it.
Oh, okay, so they, I'm trying to remember. I was asked what's the value of the house. I told them the value of the house. I believe that's what they put on the property, but I'll double check.
Right.
They dictate that?
They take that by square footage.
Oh.
Right.
So the smaller, the cheaper, right?
And when it all comes down, as the smaller square footage, it's gonna be cheaper. And it's not where you're buying, it's not where, because it's all reconstruction cost. So a 3,000 square foot house will be a 3,000 foot house. So it's got nothing to be the area, and the smaller the square footage, it's gonna be the smaller the insurance price.
Yeah, so when we get insurance quotes, John always asks me, well, what's the age of this, what's the age of this, what's the, so all those things matter too, right there. The
Yeah.
heater, the age of the heat, the age of
Well, what
the
happens is that when you start asking questions about updates, you update this, update that, companies do give discounts, for updated systems and updated electrical, updated plumbing and stuff. Because somebody, you buy an older home and you have 30, 40 year plumbing, and we got 8 companies that said we can quote through, But without no updates, it'll cancel or it might only go to 2. It don't allow us to go all 8, right?
Yeah.
So if you have these updated things, it allows us to put all 8 instead of only 2.
The big one's the roof.
Okay, I'm sorry.
The roof age.
How is that affected by material costs?
Say it again.
How is that affected by material cost increase?
Like building costs?
Well, the whole thing about it is a cost-estimated, if I did a cost-estimated, let's say on a 2,000 square foot house, we've been seeing cost-estimators come in about $125 square foot. Today, it's about $160 to $175. So what happens, these cost estimators, as things change, the lumber prices change, everything changes, it went up in the last year and a half, it went up $50 a square foot. So it's automatically built in, so when the agent's actually doing it, the increase in labor, the increase in product cost, it's all built in. And so that's what we're seeing. So the same thing happened 2 years ago, 125, today's 175. For the same exact house. I'm sorry.
Is it okay we ask questions or you guys?
Yeah, so I have one last thing to say, then open it up for questions. There is a gentleman in town, and we're happy to share his contact information if anybody's interested in it. I don't understand the program exactly, but he's a home inspector, and I think he's a general contractor by trade, but he does these, it's like surveys now, wind surveys, and you can actually get a reduction. I don't know if you're familiar with this, but there's.
I got copies.
Okay, perfect.
It's called wind mitigation.
Yeah, well, you can talk about that.
Yeah, so the whole thing about it is that they got people that come out and they survey your house, and it's called wind mitigation price. So what I would want to do is just give you a copy. It's just got the question. So if you know you got double straps, if you know you got double windows, and if you know you got shutters, and you might qualify for some of this count, then it might help you to call somebody to get it things. But if you look at this and say, man, I don't have no straps, I don't have no windows, it's not even worth it. At least I got the questions that survey guy's gonna come out and do. So before you leave, I'll get it to you. And if you know you got 50% of these things, it's worth looking into. If you're looking at it, man, I don't have double straps, I don't have these windows, I don't have this, and that, and it's not even worth it, right? Because I don't want you to call somebody, spend money, and they're gonna give you something, you're gonna send it to your insurance company, it's gonna give you 0. At least this is somebody that you can say, and even if you have a contractor friend, can you go check my house out? These are the questions you're gonna ask. How many of these I have? It would help you out before you spend money. That's why I brought it, just so you kind of give you the questions that you can actually sell, and that way you know.
So, couple questions, okay? Louisiana citizens, I know you mentioned that, and I've had experience with it because by default, because I had a few properties insured through SFI Southern
Fidelity.
And they went bankrupt based on Florida, right? So they had to be great for the town, and we had to be great for them. And then when I'm not familiar with the procedure, but obviously automatically Louisiana citizen picks it up, right? But then you have to pay the difference of the insurance cost with that. And literally almost like more than double than what I was 4 times?
About 4 times.
Oh, don't tell me that, because I don't want to look at numbers for you, but literally, probably you're right. It was a lot more complex with that. So I had to pay that difference, right? Because I still have open claims with SFI, Southern Fidelity Insurance. From item, okay, still, it came about where they were about to write a check for they went bankrupt. So now I'm dealing with that citizen. Now, I gotta tell you, I don't know if you work with them, you have friends with them. They do their own assessment for damage, but also they hire other companies to do the damage for them as well. So depending on how busy they are, right? Well, they hired one guy who came in to my property, right? He was like, had some water damage to the floor, damage subfloor, a lot of damage. He was always, well, we don't cover that. I'm like, why? I felt like maybe $40,000 for damage. And I'm glad it's more because it's a continuous drip, right? And because we don't cover like continuous drip, we cover like one-time incident. Like you have a tub that flooded and whatever the damage was caused by the tub that was covered. I'm like, I said, told me the policy, where in that, it says that. So I gave some reference. Well, luckily, I'm not trying to advertise, but we do forensic for insurance companies that they hire us, or even owners manage for me to how much it costs, whatever, if it's damaged by a storm, by a catastrophe, whatever. So I'm familiar with the procedures. So when I looked at the policy, it wasn't telling the truth. If it's constant drippage behind the wall, under the floor, if you cannot see, that causes rot and stuff. It is covered, right? So I wrote him a really semi-nasty email back, and now the manager took over and he's like, okay, we're gonna look into this some more and we'll let you know. So my question is, luckily I'm a little familiar with it, a little versed with it, how to handle those kind of things. But some other average guy is the Louisiana citizen, inspector or people that hire that works for them. Is their job to try to kind of, what's the word I'm looking for to be camouflage situation or give them like a false, you know what I mean? I mean, that's up to
Yeah, I don't
you.
think that's isolated to citizens. I mean, I think that's
Every
as adjusters are a lot of times when they come out to look at claims. If you're having, if you feel like you're really being messed over, I would reach out to the Department of Insurance and let them intervene.
Who's that? Like, who's the Louisiana citizen? Or-
No, the Louisiana Department of Insurance. I'll give you, see me after, I'll give you a guy's email address that you can send a message to tomorrow, and he'll be able to respond. Just mention that you saw me tonight. And, so I'll get you that contact information, but they shouldn't be doing that. They should be getting that money out as quickly as possible so people can make their repairs.
Yeah, I mean, you would think that they're versed on the policies and they know. So, I don't know if they're on purpose.
They're inheriting the policy, so they inherited Southern Fidelity's policy. So when Citizens steps in, they're taking up the policy that you had from the other company. So it could be Lighthouse.
Exactly as is.
Actually,
It's exactly as is.
Yes, yes. So you still have the same policy. So it's not like you take on a Citizens policy and they take on.
I'll double check that. It's just not even mentioned. I thought it was citizens policy. As I was, no? Okay, I'll just.
Yeah, and what actually happens when Southern Fidelity actually goes out, all their claims get turned over to LICA,
Right,
Louisiana
right.
Guarantee Association.
Right.
And they should pay the claims at the same language that you actually bought the
That would make
policy.
sense, yeah, that would make sense.
Right.
But I really insured myself as a citizen, but still, because the damage happened with the old
Right.
policy.
So let me just leave you with this, and we can talk a little bit more, but let me just show you how quick things change. A lot of you, I ain't gonna say a lot of you, I'm just gonna look at you, that you might have had Lighthouse, Southern Fidelity, Americans, and all these companies went out of business, right? When they go out of business, then LICA picks up their claim. If you would have called me in July, August, September, and say, no, my company went out of business, give me a quote, guess where I'm going? I'm going to Louisiana Citizen.
Yeah, that's what.
As of October 1st, 8 new companies opened up, okay? Sage Shore opened up, Gulf States opened up, Centaury opened up. This is with us on this, I don't know what other agents got. So the name of the game has changed from October 1st on, and I'm telling you, if you with the Louisiana Fair Plan right now, and you got properties all over, you gotta call your agent, call us, because they can move you out right now, but they're only gonna be able to write so many policies, and after they write it, they're gonna shut back down. And right before hurricane season next year, they're gonna shut down. So if you renewed it with Citizen, and you're gonna come up in June and July and August next year, at that time, they might have nothing open again. So I'm saying, if you can get out now, because we got
Yeah,
everything.
so yeah, so that's good. We appreciate that. So anyway, I'll take
And
it.
that's
Call me.
Yeah. Yeah. Well, what, so,
Go ahead.
no, I'm hogging all the questions.
No, it's- I got questions. Go.
Right.
Yeah.
Huh?
What you got?
Okay, just so that consumers are aware, so if you, let's say you get into a Louisiana Citizens, because that's all we have, what happens when these new insurance providers come in January, that are here right now? I don't see any of them very much on the mortgage side. So we start to see new carriers, can somebody that's signed up for a year policy with Citizens,
Yeah,
can
what's
they
good
switch
about
right
it,
away?
what's good about it, that's why I'm saying get out now, is
And so you
because
don't have to stick with that policy.
you don't have to stick with
And this is
Citizens, and the
for-
only thing you're gonna lose, if you look at the Louisiana Louisiana citizens policy, they have a $65 fee. All right? So the bottom line, when you cancel your policy, automatically you lose your fees. Right? $65, this and that, but then it gets on a prorated basis. So you would actually get charged for how many days of insurance you use. You're gonna get a refund. The only thing you lose 100% of your fee money. That's not big money, because I'm telling you, the companies that we have that open up as October 1st.
Are you seeing those companies in Orleans Parish?
Yes.
Yeah.
Oh, yeah.
Because I haven't seen many people.
Yeah. Well,
as of, I mean,
look,
I'm just starting to get
well,
close
let me
to
just
people
talk
that-
on behalf of us, right? And it's no brag and whatever, but like I'm the largest in the South, right? I know Sage Show opened up, they opened up with 5 agents. Centauri opened up with a very few, all right? And it just so because of our size, we can open up, right? But all these people don't get opened up because they only got so much they can write, and the people, the biggest people get all things. So I just want to let you know, we do have products and all these adjustments. Yeah. That has to go to the citizens.
Are they,
all right?
are they more competitive than citizens?
Well, to be honest with you right now, is that we have, it just depends on the risk.
I haven't seen much.
Yeah, depends on the risk. We can be citizens, but a lot of times it's still citizens. But after January 1st, it ain't gonna be no more citizens. It's
Okay.
63%, and then we're gonna.
That's good information.
And that's
Share
good
with my
because
clients.
these private things, they're gonna start competing against each other, and it's gonna drive prices
We have
down.
to coach our customers as well to say that, hey, this is the payment, this is the worst case scenario. You're at 7 something interest rate, highest insurance cost that you're gonna see, hopefully, going forward. And then in the future, the insurance is gonna come down. Hopefully, they can refinance another about 7%.
But I just want you to know, I don't have a mindset, when you call somebody down the street,
Yeah.
that's all that's out there.
Yeah, and then,
Because the whole thing, and don't think the price that you're getting, that's all that's out there, because we maybe can build it. And like I said, we got every company that's writing right now. So if you got a cost to debt ratio, cash to debt ratio, you need some help, call John, we can help you to get you that close.
Lisa, you had a question?
Kind of piggybacking on that, have you seen like a decrease in home sales because people are afraid of these like new insurance policies, interest rates, because home sales have risen obviously, and are people kind of waiting for anything to drop?
So absolutely. I mean, we saw some of those graphs, right? So the price going from 290 median price to, a 10% dip in 1 month. That's a lot to do with insurance and interest rates, right? That's not common to have that kind of
So it's an offset.
drop. So absolutely. So prices, days on the market right now is about 3 weeks, which historically is super low, right? We've got about 4 months of inventory, meaning it would take about 4 months for all of our inventory on the market to sell if no new inventory was introduced to the market. So it's a pretty balanced market, but we're coming out of what was a red hot seller's market, unprecedentedly hot seller's market that if anyone was paying attention, like it was crazy, right? For 2022 up until it was either June or July, the median days on market, this isn't prime time locations. Median days on market for our entire MLS, which is about 5 parishes, was single digits every month but once. I mean, that's loony, right? That's not normal. And right now we're at 3 weeks, which is still low. Historically speaking, it's still low, but no, absolutely, rates and insurance rates are huge factors in why that's the case. We're still doing business, we're still doing transactions, but no, it's absolutely, it is definitely slowed down.
do you,
Blair, go ahead.
No, I just have something to maybe clarify with Representative Willard, sorry. So as Nolan touched on earlier, the wind mitigation credits is something that we had a representative come and speak to us about, an home inspector that you either have or can improve your home to have these possible insurance credits with, roof bracings and stuff like that, sealants, my understanding too is a big thing. A second piece that he mentioned that we didn't get a lot of clarification on was a fortified roof program with grants available to fortify your existing roof. Do you have any kind of insight on that for
Yeah, that's
everybody?
That's the one I was talking about earlier. So that'll be a Louisiana Department of Insurance program. It's not up and running yet. My understanding is that we're waiting for funding to become available, and I think the commissioner is seeking $10 million to get that up and running. And again, I hope that we have that up and running sometime early next year. But I can't really say. I actually asked the commissioner about it. He couldn't really.
What's the likelihood?
We might have to
of
wait
early
for session.
What do you think the likelihood is of early next year in conversations with our clients, you know?
I don't want to even give you a number on that because at the same time we'll be trying to identify funding for that incentive program to get more companies to come here. And so I just, I don't know how much appetite the legislature will have to kind of just give away. And I'm not saying it's like a bad giveaway, it's all needed. The fortified roof program is needed. Whatever we can do to attract more businesses to write policy South Carolina 10 is needed. But you have so many interests that need funding with limited resources to go around. So it would really be a shot in the dark.
So focus on the wind mitigation portion of that kind of insurance credit for our clients.
I think that
Focus on that front part.
I think the first thing that you're going to see that's going to drive rates is competition.
Yeah.
So if the government generates some kind of grant programs for more companies to come in, we're generating competition. So I think that would be the one thing that you're going to see rates go down.
And what I'll also say is next year is an election year. There were some that, including myself, who are uncomfortable with the fortified roof program. It is being administered by the Department of Insurance. If you give somebody $10 million to go out, and it's kind of open-ended, right? There's no income cap, there's no property cap on it. It made some people uncomfortable, so trying to get $10 million for that next year might be tough.
Is that really for the whole state? Is that really for the whole state?
For the program, for the fortified roof
If not,
program.
that's the whole lot, isn't it?
10 million more than we got.
Yeah, but let's ask a layman's term question, like, what is a fortified roof? What does that mean?
Yeah, go ahead.
No, so really that's all it is that is just give you some when a roof just give you a little it's different kind of strapping that you put on your rafters and everything else. One of the things that is when you do a roof right now, you put your wood down on your house, then you lay your paper on top and you put your shingles, right? Well, a fortified roof, they put the plywood down, then they go tape. They actually tape every seam of it. Then they lie. So there's a lot of more.
Not somebody who just put a new roof on.
You don't want the wind to get under. That's the whole goal. So wind can't.
I can add real quick, so back before Katrina, the roof design here in New Orleans just really didn't for 80 months on after that the code has changed. For new roofs, actually right now for 143 miles per hour, which includes all that stuff, strapping and rafters and all that stuff. Right.
There's an actual water membrane
Yeah.
that is put down. So like now you put tar paper down, which is waterproof, but it also blows right off during high winds, right? So now with the fortified roof, they're putting down basically like a sticky version of that. It's called like ice and water shield is the name brand.
So,
they put that down so if the shingles blow off, your roof is actually still mostly protecting your house.
Is this what's happening on new, is this code for new roofs that are being built? Okay. That was kind of more of a question of what does that mean? And then I have a question for you as well. I don't know, this is something that's been that I've been thinking in my head, but if everybody has Louisiana citizens, like, what is the state doing to protect themselves? There's Carl that's coming up, and who knows where it's going, right? Like, if we're almost out of storm season, but we're not, and what if something happens? How is the state protecting themselves? Because everybody below our 10, as we've all talked about, is on the Louisiana citizens. So what happens? And then is there something that the state is doing to protect themselves?
Yeah, I mean, short term, we're trying to, like we're
But
talking
like,
about
that's not,
depopulating
that's
citizens.
like, if there's a storm,
Yeah.
like, the state's got a dish.
They got reinsurance.
The citizens has reinsurance
Has
as well.
reinsurance, that is-
Yeah,
and that
and
is-
so part of that rate hike,
Okay.
is to keep
Is
up
that
with that
reinsurance?
with the increased cost of the reinsurance market as well. But the state does have reinsurance, citizens does.
Okay, guys, we have time for one more question, and then we'll wrap it up. Anybody?
All right. Well, I actually have two questions, because both brief. Can I ask one to Mr. Locke and one to Mr. Lewis?
Sure.
Based on your experience, do you believe that these policy writers will start writing policies again if we enjoy the sort of less active hurricane season that we had this year?
It's, put it this way, if we had another storm, it would have put us back probably another year or two. Just one free year like we had, we saw it. I wouldn't have think that October 1st, we had 8 companies that opened up. If you'd had another storm, I would say none would open up. So to answer your question, this 1 year of less activity that we had here changed it already. So, to answer your question, it's no doubt.
Great, because that's kind of what I've been telling my clients. Not you, Mr. Willard. Are you familiar with the LBI's mediation program? Because I was going to ask you, do you have a pulse on whether or not it's been successful, if it's being utilized a lot or not?
I'm not familiar with that. What is it for?
It's the LBI. They have a mediation. You guys know that mediation is an alternative to litigation. LBI, Louisiana Department of Insurance. Yeah. So it's an alternative to litigation. You have mediation, you have arbitration, and the LBI created a mediation program with the amount of dispute of your damages is $50,000 or less.
Oh, yeah.
Do you know if it's been used?
I haven't heard much about it, and I haven't heard from anybody who's used it, so I can't tell you.
So what, this is like you said, they will mediate on your behalf?
They won't mediate on your behalf, but the thing is, mediation is not as expensive as litigation. But you may, pay $450 to $500 an hour to a mediator. But under the LBI's program, there's 2 mediators selected: MAPS, which is an organization, and Perry Dam, which is also a mediation company. You just pay a flat fee of $600 for basically, I think, an hour to an hour and a half to make your case based on proof of loss that you have. Of why you should be paid up to, $50,000 more than whatever your insurance offers.
But like I said, we had over 16,000 claims.
Right.
And every one of them that didn't feel like it, they went into the litigation route. They didn't go to the litigation.
Okay.
So I don't have no experience with that, but I have 16,000 claims, and everybody that wasn't happy went to the litigation. They didn't go to the
So I didn't have any constituents go through litigation, at least that told me they went through litigation as well, if they had to.
Yeah.
So we're out of time, but we're not going anywhere. We're gonna stick around. I think you guys will stick around a little bit longer if we got
Guys, if y'all just want a form for y'all to read to see if y'all qualify for anything, I'll just give you all 30 copies, and even if it's somebody down the road asks you a question, at least you know if your property qualifies for any of these discounts. If it helps, it helps. If it don't, it don't. If y'all have any questions or you want to come to see me and John in the office, and we can strategize with y'all with anything y'all need, get in touch with John or myself, and we'll go from there, and I'll get you all copies.
And I want to thank everybody for coming out. I really appreciate it. We're going to do another event